Hello, my name is Junganeli. We are going to be looking at Blaw 2. So make sure you subscribe to the channel.
And the first differentiation or the first difference between companies, they first of all tell us that they're public and private companies. Now, what I need and what I've seen from very many students, they decide to they confuse holding companies and, let's say, subsidiary companies as different types of companies. Those should never be included in the different types of companies. If ever you asked, they are simply another category of, these are already companies. A holding company could either be private or public, so it's just a subset within. So once you ask the different types of companies, I do not expect you to tell me holding company or private company. So the categories are different. The first one will be private companies. A private company, and what you will notice that there is no clear definition of what a private company is, or public company, or limited. These companies are only defined according to their characteristics, or according to the forms they take, as provided for by the Companies Act. So you look at the characteristics. For instance, one of them is that this company has got to be formed with a minimum of one member. Why it is one member? Initially, under the old law, it used to only allow a minimum of two members. But with the new Companies Act of 2012, it introduced an aspect of a single member company. Now, a single member company allows for one member to form a company. Then it limits the maximum number to 100. Of course, again, the old law only limited the maximum number to 50. Now it limits them to 100. Then the law also restricts a private company from free transferability or free transfer of shares. Why does it restrict the free transfer of shares? Private companies tend to have a characteristic of a few people who know each other coming together and forming these companies. Now, let's say wife, husband, child, these guys know each other, close family. So saying, since it's your fewer people, you have a smaller vision that you share, do not bring in other people. The other reason why, okay, basically some people might not be able to trust the third parties from outside this circle. The other reason is that why these shares are not freely transferable is that it would be interesting for government to know how these shares are transferred. So if it is a private affair, then government cannot be involved in the management of these uh, companies, as compared to what happens with public companies. With public companies, there's a lot of government involvement in the management of the same, which is different from private companies. So that's why we see the free transfer of shares is not allowed in private companies. Free does not relate to the cash that you pay. It only relates to, you can transfer from Jude to James. If James is tired of a company, he goes to John, and like that. So it's not allowed in private companies. Then it also prohibits invitations of the public to subscribe to shares, that you cannot advertise. When you look, if you read the public company, and again, like I said, how you differentiate. Someone could ask you, what's the difference between a public company and a private company? A public company will be differentiated from a private company by looking at the different characteristics for each one of them. For instance, by now, if you look at the minimum number of members for a private company, you'd look on the public company how many there are. Then you look at the maximum number, you look at them differently. You look in the public companies, is there free transfer of shares? Yes. In private companies, is there free transfer of shares? No. Does the private public company allow you to advertise or to invite the public to buy shares into your company? For instance, if it's Nile Breweries and it's listed on the stock exchange of Uganda or East Africa, some of the companies are cross-listed. Cross-listed, I mean, let's say you have a company, let's say like Equity Bank, which is listed on the stock exchange of Nairobi. A stock exchange market is the market for shares. in companies. So if it is listed on the market in Nairobi and it is also listed in the market in Uganda, that means that company is cross-listed. So you look at that too. Then the quorum. What is quorum? Quorum means the least number of members that must be present in a meeting for the decisions of the company to be binding or to be allowable by the law. That is the quorum, the least number of members that must be present in that meeting. And they're saying that the quorum must have at least 2 members present in person, except for single member companies. Of course, since it's a single member company, that means the quorum will be 1. You will not have no one, you will just have 1. Then there must be number 6, that there must be a minimum of 1 director in case of a private company. Minimum of 1 director. You also look now at a public company, minimum of 2 directors. Are we together? It's 1 director for. Now you need to differentiate between that. Not all private companies are single member companies. So you will have a plain private company which is not a single member company, and you will have a single member company. For a single member company, the minimum number of directors to be present in a meeting shall be 1 director. Of course, for a company which is not a single member company, then you need 2 directors to be present, or 2 individuals to be present. Then it may be formed with limited liability or unlimited liability. Limited liability, as we shall see, we shall define it as we go along. So they're telling you it can be formed by both if it's a private company. As to whether you can form, that's another difference. Whether you can form a public company with limited liability or unlimited liability. Now, I'll not go into the characteristics of public companies because they are basically almost the direct opposite of the characteristics of a private company. Kindly read them through and appreciate them. Discuss these things. Also try to read the internet. Try to use the internet, and that's why your assignment had I asked you to use relevant examples in this country, because I do not expect you to be cramming these things. I need you to apply this knowledge to the day-to-day life that we go through, so that you appreciate, if I'm looking at MTN, is it a public company? Is it a private company? So that you're able to tell these things apart. Now, for the work that I have read through, I have seen that you people have endeavored to give me the correct examples, and that gives me hope that you're understanding the subject. Now, they're saying that, to sum up, the decisive advantage of the public limited company over a private company is its right to raise capital from the public. That aspect of the public company being free to transfer shares to other people, it means that the public company is free to bring in. For instance, I have a company, private company, as BBA, Group B. Now you guys are all students. Perhaps you do not have a lot of money on you, and you say it's a private company, and you're saying, well, why don't we turn this into a public company, and we allow in maybe the lecturers. The presumption is that the lecturers might have a little bit more income than the students. So if you brought in the lecturers, perhaps they would invest more money in the company. That means you're able to raise capital, which literally would mean that the company will have a lot more capital at its exposure, and be able to trade very well. Then a private company may be converted into a public company by altering its articles to exclude the restrictive provisions in the articles. Basically, and we shall look at that as we go on, how a public company a private company can be turned into a private company. And we are saying it's by altering the articles of association to allow for free transfer of shares, of course, and also for calling of members of the public to buy shares into the company. I'll give you yet another audio. Kindly be reading through that.
Thank you so much for watching. Make sure you subscribe to the channel.